Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So a bit of a snapback today. In the morning call we talked about, can we get a bounce, what type of bounce? And typically after a move like we saw in the past two sessions, with the futures up, everyone's going to have short on the brain and just want to short. And the way the market's been, you might want to be a little careful or at least wait. That, there's always, or there's sometimes the easier part of a bounce or the snapback. And then perhaps they push the envelope a little bit to not make it as easy on the shorts, and then things kind of work itself out. But I'd say after today's action, probably still I would be neutral. You have longs working, shorts working, and I know for me, I got really tactical, and we talked about different strategies. One strategy being portfolio approach with 7, 8, 9 stocks, and then if upper levels break and 8-day moving averages break, or 21, you get out and maybe get a cute short and maybe just get out of the way. And then you start looking for some red dog reversals for tactical cash flow, not playing 52-week high breakouts or tight setups, but stocks that just came in $18 or $19, and you figure out how you could make 3 or 4 on some type of oversold bounce. And that was typically what a lot of us were looking for today. So first, if you go to the chart of the SPX, you will see that overall, you look at the action here. This is the last huge range or channel that we had from February all the way into May, where we finally broke out. This was the area that the market was very temperamental. Looked as if perhaps we might break to the downside. This is when I think Tepper came on and all those guys and Ralphie and everyone was talking about 10-15% correction, and then that happened and we broke out and that was off the table. So anyway. Here's where we are now. Okay, you take a closer look, because this is what we tried to do in the morning call today in the video with myself and Brittany. You had two trends here. You have one trend from almost a breakout point that we sliced through, okay, right around 1968, 1975, to get really short-term active traders out of their portfolio approach. But then you had this more intermediate trend, which was right around here, which also matches up with the 21-day, not the 8-day. You have the 8-day, you have the 21-day. If you're super tight, you use the 8-day. If you're a little looser, you use the 21-day. And if you've been using the 21-day, you're not as active. Every time we've had, this, like, look, just real quick. You had this move here where it looked as if we could break, and you had some type of snapback to then measure to go from here being neutral to negative back to maybe on this day. Got back a little bit more than half, so now you may be neutral. And then on this day, when it went a little bit further to negate this, maybe you're still neutral, maybe not neutral to negative, and then it continued. So right there, this bar did not contain the bounce. And then you go all the way to, remember that outside day right here, could have got you out of stocks again, after maybe getting out here and then riding them again for a week, all different types of names. This got you out of your 8-day. So now you're all of a sudden neutral to negative. Then what happens? Boom. You have a small red dog reversal here at 1948. So this probably got you back to neutral, okay, at least, where hopefully you didn't just try and short that whole day, because if you did, you got stopped out. And then the next day was a little volatile, where it had a big range before going up again. So PS, you had 2 days of downside, and now today, a green bar that almost took back this day. So it looks a little similar to to here and here. So that at least should get you back to neutral, to, okay, maybe we're not going to just fall apart, look for some longs. And today I think a lot of people did not fight this grindy, slow move up, which is good. Hopefully you made some money, because there was some money, in the spiders and a few other names. And so at this point tomorrow, we'll see what happens, okay? You go to your 5-minute chart, which I also posted on Redler All Access. What's it called? This morning, we'll go to the spiders, the 5-minute, and you will see that here we are. This is the gap. If they want to fill this gap a little bit tomorrow and squeeze everyone a little bit more, maybe 197.40. I was in the spiders for most of the day. Right here when the Fed spoke, got back involved, somewhere in that spot, and I just sold the close because I don't want to be long the overall market, maybe long some stocks based on some patterns. So today, coming in saying, okay, I'm going to look for some red dog reversal tactical trades. You could do that in being down sectors. And one thing we talked about was the bios that actually did it. So I want to show you the example of a red dog reversal, because a lot of people are like, oh, how do you play a counter trend move without catching a falling knife? What does this actually mean besides it being your name and you being a little narcissistic and having something named after yourself? Anyway, let's go to the IBB. First go back to the daily, and if you look at the IBB, you'll see that there was a nice trade here overall in the bios since breaking above this wedge type pattern that followed the 8-day moving average. And then what happened? This upper level failed. So on Monday, maybe you got out of your trade, or maybe you got out of a few tiers, or maybe you got out and then got short and made money yesterday. Okay, what'd you know today? All you knew today is what is the IBB's low. Okay, it just came from as high as 266 all the way down to as low as 251.76, so what is that, 15 points? So 15 points to the downside, maybe you get a cute calculated trade back to the upside, even if overall it can continue lower. So that's what happened today. Okay, let me take a closer look to show you what the actual strategy is. So, people who are thinking, oh my goodness, we're in a bear market, the bios are going down to all the way here, they might have shorted the bios when they went below 251.76, saying, you know what, I'm going to short the third down day. Where, me, I usually don't like to short the third down day. I stay for one or two and maybe switch it up on the third or whatever. Anyway, here's when it went below 251.76, put in a low of 250.34, so $1.40 lower. And then what did it do? It came back above. So if you're like, you know what, I think I can make $3, $4, $5 here for an oversold bounce, a tactical cash flow trade because it just pulled in a lot. Not saying it's going to make new highs in the next week, but just a trade, because we do trade here at T3 anyway. With that being said, it got above this and it closed at 256.17. So you could have made $4 or so if you just did it and held it and said, I'm going to buy it here, put a stop there, take my hands off the keyboard, and boom, you made yourself some money. And if you look at the 5-minute chart, you could see it even more clear on why it's so cool, because it happens so fast, because you have people fighting over that print. Here's the print. So quickly went below. So if you shorted this low and then this happened, and then all of a sudden it comes back above it, you're like, oh my goodness, I just chased this to the downside. That's 16 points. I better cover. Or if you bought it here, saying I'm going to take this overnight, it's oversold, versus that you probably got out there and then you said, oh my goodness, it came back above. I just hit out the bottom. So that's why above this, it turns into a really fast trade. So if you're aware and looking for it, this red dog reversal could be a great cash flow trade. Okay, because shorts chased it, longs got stopped out, people need to readjust, and that could happen. And sometimes, it leads to a little bit more upside. Now, the bearish argument here on this, just like the IWM, is that, you have the left shoulder, the head, okay, and then now all this bounce is to develop a right shoulder for then lower prices, which it could. It could be that. We could open up tomorrow and it could go lower. Okay, but does that matter to you if you're trading a tactical red dog reversal? If maybe you bought, you just say your tier size is 1,000 and you bought 1,000 there, what I would say is you take home 500, so you have some booked, some in for it tomorrow. If you did 2,000, maybe you book, 1,500 or whatever, or whatever it is, 5,000, you take home 2,000, or if you had 500 shares, you take home 200 shares. You could do it as a tactical cash flow trade, and sometimes it leads to, another trade. But all in all, intraday, that's a good tactic to use, and you probably could have used that, in a lot of names that if you didn't get caught in, there was some, some attention there. Real quickly, Apple, I didn't really do much with it today. Inside day, let's see if it could have another inside day and develop a flag like this, and then maybe we break out above this. So didn't do much yet today. I think it needs time. Amazon, I'm not even going to start getting into these. All these high beta names just had a day. That's why we said this morning use your 5 and 15-minute chart. This held the bottom end of the range again, really in no man's land, not much to talk about it except for it's going to take time to build. You look at Google, also what did it do? Came back in, held the 21-day, held prior resistance, now becomes support, but still down here, needs time. Netflix was a little weaker. It actually didn't really bounce, okay, so it's still just holding here, so see what happens soon. Tesla, we talked about in the Red All Access note that maybe it hits 224, and pretty much it did get to 224. I figured, bottom tail. If you got stopped out here at 235 and saw that this was prior breakout point, you saw a tail didn't close in the lows when the market did, showed you relative strength yesterday versus this day when it showed you relative weakness, maybe you made some money there. Okay. As far as another trade, if you navigate correctly, I know LinkedIn sucked, okay, here, sorry for my French, when it broke below this 170, but if you got stopped out here, there was at least a day trade today. Okay, a lot of us were looking at it, a Munster, however you say his name, he says he likes it and got some attention there, and P.S. A red dog reversal happened, right? 155.99, stock came in from 173, so 18 points to the downside. So maybe there's some kind of bounce or calculated tactical trade here. So what did it do? Is went as low as 154. So if you did this for a red dog reversal, okay, and you bought it when it came back above 156, you had to stop at 154. That's $2. $2 risk. Okay, I'm going to risk $2 because it just pulled in from 174 or 175. If I was buying here at 175, which I was, and I lost money, you know what, maybe here, calculate it's a new type of setup, but it's not a bull flag breakout back to the 200-day. It's a oversold bounce type play that could probably still go to, to at least half of the SPAR or the moving averages. So maybe it does go up another $4 or $5 just for a trade. Here was your trade, red dog reversal. Went back above it, put your stop there, closed 159, was as high as 160. You just made 4 points on $2 risk. So that's what, 2-to-1 ratio. And then if you had 500 shares, maybe you go home with 200 to go to there. If you had 1,000 shares, maybe you take home 400 or 500. So you book some so they can't take it away. You hold some because sometimes you get a little bit of follow through. Kind of like what happened with the follow through in some of these airlines. Okay? UAL, actually that's not a good bottom, let's see, Delta. So I want to show you like a bottom tail. All right, here was your bottom tail, okay, into a day and a half. All these opened up. They weren't gap and goes. They were open up and sells. So that was your day and a half tactic. If you didn't get caught in this mess, you saw the reversal yesterday. You took some home, and AMR came out with some decent news, or whatever. I don't even know the symbols of that thing. Oh, there you go. Look at that. Boom. Actually, this one closed well. But anyway, this one too closed off, with the little hammer bottom. So, you know what? I want to go watch the Netherlands game. My son, it's his favorite team. He picked it before the tournament started. I did come out with a fun call yesterday, or soccer ball to Cajonis. I picked Germany and the Netherlands, so we'll see if the Netherlands come through. And, we're in a tape right now that there's some 2A action, which is good because a lot of people were complaining about the slow grind over the past 2 months, which we liked because you could have been in portfolio approach and you could have found relative strength and you could have used the tier system and added and taken off and not worried about being short. But now we're in another one of these inflection points, or to see whether or not that was it. Can I tell you, yesterday's low is the low and just go all in? No. But same way I'm not going to say just start shorting everything and we have to go down, 5% from here. What I will say is there's some tactics to use at different points in the market. So now, if you want to use tactics, the red dog reversal is a good one. You saw a lot of them work out today for cash flow. If you want to stick with them overnight, fine. And who knows, if they act well, they build, and all of a sudden that was the low in the market, and then you're back in portfolio approaches, things show their face. BlackBerry, the stock got me out yesterday, and I got back in today. This is trending really well, and still looks really good on a macro, chart. This looks like, it could get to this 13 to 14 or 14 to 16, like I said when I hosted CNBC Asia Monday night. So, if you're in it for a swing, stay it. If it's a day trade, there's some of those there too, and closed decent and looks okay. And Facebook also, it had an inside day to the upside, and maybe you get a little bit of follow through. Okay, if you exited it here, okay, when it broke this upper flag, or you exited here, or we maybe even got short, it was worth a try at the 50-day. Now I don't know if it's going to be a screamer to the upside, but all in all, perhaps it wants to retest this, and you could get another 50, 60 cents, today. But that's it. There are times when you look for more, sometimes when you look for less, sometimes when you do less, sometimes when you're heavier. Just, keep reworking your process because every market changes, or every week could be a little different. And at this particular point, you got to be a little bit, neutral, looking for longs and shorts, not just all long, and definitely not just, short on the brain on everything. Have a great night. Go Netherlands.